Good afternoon and welcome to the ASEAN Midday Market Watch. Our guest today is David Kuo, founder of the Smart Investor in Singapore. David, great to have you on the show on the eve of a public holiday.
Yep, Selamat Tengah Hari, Brian. How are you?
Yeah, good, thank you. Thank you very much for coming in. Let's take a look at how markets in the region are performing, and then I will share, and then we'll get your insights. We've got the SGX, which is at 3,124.32. It's down 0.63%. Bursa Malaysia is at 1,582. It's up 0.31%. Then we've got the likes of the Nikkei, which is down significantly to 2.31% at 27,946.77. Shanghai Composite is at 3,441.42. It's pretty flat at down 0.1%. The Hang Seng is at 27,910.60. It's down 0.37%. The ASX 200 is at 7,020.4. It's down 1.08%. And the Kospi is down 2.15% at 3,140.46. Now, bloodbath across the Asia Pacific region, David, what is the reason for that?
Okay, I think it's a bloodbath in certain places, but not in all places. I mean, where you are at the moment, Brian, over in Malaysia.
That's the trend. Only Bursa Malaysia is up.
I know. And what was the reason for Bursa Malaysia being up? Top glove once again, you know? So I've said it before and I'll say it again, that this pandemic is not really going to go away anytime soon, and it is going to hang like a dark cloud, which is what I'm getting here in Singapore, by the way, a dark cloud over all our heads. And people will be looking at this pandemic and, of course, these new variants coming in. So I think people are a little bit concerned about that. And the other thing, of course, is that some markets here in Asia, particularly Taiwan, is following the lead from America. We actually saw a big sell-off in America last night, both on the Dow and also in the other markets as well, particularly the technology stocks. And when you have a country such as Taiwan, which is really sort of quite heavily dependent on the technology sector, when there is a sell-off in the tech sector, then Taiwan gets pummeled. But the rest of the market, even here in Singapore, as you mentioned, I mean, Singapore STI is only down about 0.6%. So I would say that some markets are quite resilient at the moment, whereas others, the ones that are quite technology dependent, they're not faring that well, Brian.
But David, you're a value investor, you're a growth investor, you're an income investor. Does the pullback in markets present opportunities in values and cyclicals?
Oh, for sure, yeah. I have this mantra, that is that if a company doesn't pay me for owning it, in other words, if it doesn't pay me a dividend, forget it. I'm not that interested. So I'm always looking at income, I'm always looking at dividends. And when you have a look at what is going on in the corporate level, many of these companies are able to pay their shareholders, they're able to reward the shareholders with dividends, in some cases rising dividends. So whether
could you give us some examples of some companies that are paying rising dividends?
Oh, Pepsi Cola for one, you know, over in America. I can't remember now. I mean, we're talking about decades of rising dividends over at Pepsi Cola, and also 3M. That's another one that has the ability to increase its dividends year on year. So for investors like myself, I really do like companies like that. Coca-Cola is another one, which is why Warren Buffett is such a big fan of the soft drinks maker over in America. So there are companies out there that have the ability to pay dividends, pay rising dividends. And when the share price falls, that excites me tremendously, because it means that I can buy those dividends at a lower price. So that is the mentality of income investors. We're always sort of looking at where we can get a good return on our money, not in terms of the share price growth. The thing about share price, of course, the thing about share price, Brian, is that markets can give you a share price rise and they can take away that share price rise. But if they pay you a dividend, it's yours to keep forever. And so therefore, that is why I like income over and above anything, whether it's growth in terms of the share price or any other metric you want to measure.
Okay, now moving on from that, I've got to ask you about the SPH restructuring in Singapore. Now, shareholders seem to be getting the short end of the stick with this restructuring. What's your view on this? Should there be a pullback from the pushback from the shareholders?
Okay, first of all, I have to declare a slight interest here, Brian, because I do write for the Business Times, which is owned by SPH. And
Okay.
so I have a monthly column that goes into the
So hopefully they're
Times.
not going to stop you from writing anymore.
Oh, no. I don't think it's going to stop me from writing. But I think, you know, talking about writing, I think the writing has been on the wall for SPH for quite a while. I've looked recently at the SPH results, in particular, the media side of SPH, and revenues have been declining for the last decade.
Yes.
Profits have been declining for the last decade. They declined so much that at the last set of results they announced, the media side made a loss. And if you were a shareholder in SPH, you would be asking questions and saying, do we really want to keep a loss-making division within SPH? And don't you, as a board of directors of SPH, have a responsibility to me as a shareholder, not that I own shares in SPH, but as me as a shareholder, to ensure that the company is resilient in some ways? And if you have something that is not making money, shouldn't you be thinking about getting rid of it? I mean, I go back to this Boston Consulting Group matrix that they have. Within SPH, you have rising stars. You have things like the nursing homes, which are doing quite well, the property side, which is doing quite well, the student accommodation that is doing quite well. So why are you sort of trying to fly with an elephant on your back called SPH Media? In other words, the media side of the company. Can't you just accept the fact that media is not going to be making any money for you and somehow you have to hive it off? So is it the right thing to do? I don't think anybody wants to see the Straits Times or the Business Times go bust. Nobody wants to do that. But you have to accept that it's not going to be making money. And as a shareholder, why are you supporting a division that is not making any money, Brian?
But David, that's actually not the bone of contention for many people. The bone of contention is what is perceived to be the overly generous transfer of assets to this so-called non-profit media entity, because that's not looking after SPH principal shareholder interests.
Yeah, but
what's your view on that? Because there are significant amount of assets and shares that are being transferred over to this loss-making non-profit entity.
Yeah, I agree with you. But the thing is, you can't just simply sort of cut them loose and say, stand on your own now, because they're not going to be able to do it. I mean, a good analogy would be, say, my son or my daughter living in my home, eating me out of house and home, not paying for anything, not paying for the food, not paying for the laundry, not paying for the cleaning, not paying for anything. And I say to my son or my daughter, don't you think it's about time that you moved out? Really? Yeah, seriously? I kind of prize my privacy. So I'm going to cut you loose and I'm going to let you go off and do your own thing. You can fly the coop now. But the point is, you can't just simply kick your son out of the door, right? You can't just boot him out of the house and say, well, sleep on the streets now. That isn't a responsible thing to do. So what you do is you try and help him out and say, for instance, I'll give you some money that you can use to buy a home for yourself, right? I'll get you on the housing ladder. So I think that is what they're trying to do for SPH Media. They can't just simply sort of cut them loose and say survive, because they know they're not going to survive. Yeah. And so they give them a bit of a dowry and say, this is what you're going to have. And we accept the fact that you're not going to be making any money, but hopefully you'll find some parts of your business where you can generate revenue and you can survive on a leaner basis and cut your costs somehow.
Now, David, final question. What are the key events and announcements, data points this week that you feel that are going to move markets?
Oh, it's got to be that US inflation number, you know, that's coming out. Yeah. A lot of people, I mean, previously it was around sort of 2.6, 2.5%. People are now saying it's going to be north of 3%, which is really what is worrying the market over and above the pandemic. They're saying that if inflation is going to be a problem, what are we going to do? Is the Fed going to step in and start increasing interest rates? There are two views of thoughts here. You have the people who are siding with the Fed and say this is just a transient thing, it'll disappear eventually, so don't worry about it too much, go home and worry about something else. Whereas the other people are saying, this is a real problem. We are going to get inflation in the system. And is that going to pull down the markets? Because ultimately, if the Fed does increase interest rates, it acts like gravity on the market and will pull down share prices.
Yeah.
So I'm looking at those numbers, Brian. Yep, the inflation numbers.
Now, David, thanks again for coming on the show.
You're welcome. Yes, and my son's left home, by the way.
We've been speaking to David Koh, the founder of the Smart Investor in Singapore, on BizTech's ASEAN Midday Market Watch. Please check out our LinkedIn and Facebook sites, and also our website, www.biztech.asia. Thank you. I'm Brian Fernandez, and thank you very much for tuning in.